insurance. Before we talk about business insurance, we want to rehydrate about our groups. So, since this is our own advisors and leaders, everybody knowing about the Tata and the groups. So, 150 years old knowledge and wisdom created group and the world's most trusted brand. It is not about in India, in the worldwide, we are called as our most trusted brand, and 66 percentage of our things goes to the Tata Sons, and we are present with almost 100 countries and 6 continents, and more than 10 lakh people are currently with the Tata AA and paneled with the Tata AA. And India's only value-based corporation, a visionary, a pioneer, and a leader since 1968. So Jamshedji Tata, who started this group. When we talk about AAA, then AAA is about they are into 18 markets and they are having more than 100 years of experience in selling life insurance. So they are also a very big legend. So both these people joined together and they started this Tata AA. And currently we have close to around 86 lakh families are being protected through life insurance. And when we talk about the sum assured, here is the game changer from Tata AA, including the private and also the public sector, including private and public sector, which includes LIC, which includes LIC. The sum assured what we sold last year, 2024, we have overtaken all the insurance companies in India, including the big giant called LIC. We have sold close to around 4,72,000 crore rupees of sum assured we have sold last year. So kudos to the entire team. And business insurance also played a major role in bringing high sum assured cases like 50 crore, 100 crore coverages and all. And when we talk about asset under management, we have 1 lakh crores of asset under management, and our client settlement ratios is 99.13. And we are currently with more than 700 plus branches. So this is what about it. So let's first understand how we can help a business owners. So whenever you are going for a call, whenever you are going to meet a businessman, you should always wear a cap of a insurance consultant. You are an insurance consultant. You are not an insurance seller. Okay. You are an insurance consultant. You are going to meet a business owner. You have to think in the perspective of business owners ka problem. It is not about I need to go and sell one individual policy to a person who they might be requiring for their child's education, child's future, personal retirement. See, a businessman is always two different category. One, he always thinks about his business and the success and the legacy what is going to create for future as a businessman. The same businessman as a family man, if you see, he creates legacy. He wanted to ensure his family is happy, whether he is there or not. He needs to generate income. So a same person is having two different entity, like in Anniyan movie, no, Ambi and Remo. Same like that, there is a two character in the business. One as a businessman, two as an individual family man. We always see our businessman as one man only, which is called family man, because every businessman will have a family, and for that family only is working hard, and for that he need to save money. Yes, that is very important. As a businessman, what are all the challenges the businessman is facing, and do can we provide some solutions for this businessman under the heading called insurance? Yes, you can provide a lot of support to them. That is why business insurance is very, very crucial. Okay. So today, what we are going to cover, we are going to cover why business insurance, why somebody has to promote business insurance, or why any businessman want to buy business insurance as a under the business heading. Next is going to be the eligible entities under BI. So which are all the companies I can go through? Many people will talk about whenever I talk what companies that, sir, they will tell, sir, it's the manufacturing industry. Sir, that is a mill. That is a FMCG company. Whenever we talk about entities, means entities is not the manufacturing or the service what they provide. We are talking about every industry will be listed under either a private limited company or a partnership company or a proprietorship company or a public limited company or as a trust, correct? So under that, which are all will fall under, whether I can give a business insurance to a proprietor or to a partnership company or to a trust, all these things we will be seeing it. And very importantly, offerings under BI. Offerings under BI, we are going to see with the product. Today, we are going to see with the product. So how this BI is going to help that businessman to invest less and save tax and get a better returns. And last, why he has to invest with the Tata AA. So all these things we are going to see. Okay, let's come to understanding of one particular point. Here we are talking about a private limited company. My dear friends, the screen what you are seeing is about a private limited company because we are talking about directors, shareholders. That means it is not a proprietorship company, it is not a partnership company, it is a private limited company. Understand? We are current slide is talking about private limited company. So don't get into the shell that the employer-employee is provided only to private limited companies. It can be given for partnership also, it can be given for proprietorship also. But here the screen, what you are seeing is for private limited companies. Okay, that's the reason why we are saying as shareholders and directors. And why the first slide itself is starting with private limited companies, because whenever you see the private limited or public limited, the word called the LTD, majority of the times you come across roads, you will be seeing a lot of companies' names, correct? In that company name, if you see PLTD, PLTD, public limited or private limited, that the LTD means it means a lot for an organization. That means it means the
Liabilities.
liabilities, yeah, the liabilities are limited. The liabilities to that organization is limited. It is not that unconditional liabilities is allowed to them. In the sense, say for an example, if I'm a proprietorship concern, I'm running a departmental store, right? I'm a proprietorship concern, and I own 2 crore rupees of asset as a personal asset. And for this business, there is 1.5 crore rupees of investment is done in this business. Now I wanted to expand this business, so I'm getting another 2 crore rupees of loan from the bank and from my known circle. So already the company's worth is 1.5 crores. Now additionally investing another 2 crores. Now the investment in my business is 3.5 crores. Okay. Now, if this business goes for a loss, if this business goes for a loss, all the properties what I am having, either personal or business, both will be tagged towards all the money what I lend, what I got it as debt. So the debtors. But when it comes to private limited insurance, I mean private limited companies, since I have told that liabilities are limited, so that means in case of the organization is going for a loss, the loss will be managed only by the organization. It will not hit the directors or it will not hit the shareholders because the liabilities are limited towards only the company, not his personal properties. Okay. So that's the reason why we are starting here. And that too, we wanted to start with the directors of that organization, who are the owners of that organization. Because in private limited company, majority of the directors will be a owner and also an employee to that organization. And also a employee to that organization. So whenever you are going and meeting a private limited or a public limited company ka top level people like managing directors, shareholders, you can always present this particular point because they are the one who wants to who are worried about paying more taxes to the government. They'll be paying huge number of taxes to the government whenever they make organization more profitable. So whenever you meet a private limited company or public limited company directors, they'll be slightly worried because whenever they multiply their income or they multiply their profit, same way they are going to pay huge taxes to the government. Right. So let's see how the taxation works under this particular thing. If you see in a private limited company, any director or a shareholder, they'll be getting money in different forms. One is in the form of remuneration or salary, or in the form of dividend, or in the form of loan, or in the form of employer-employee. Forget about the employer-employee currently, right now. Let's see, if I am a director for DSP, which is a manufacturing company, and the company name is DSP Manufacturing Private Limited, and I am the director of that organization. And whenever I receive salary from this DSP Private Limited company,
sound రావట్లేదు.
It's audible, sir.
Can I ask everyone to go on mute, please?
Yes, sir. వస్తుంది.
Yeah. Okay. Thank you for your confirmation, sir. Yeah. Let me go to the presentation again. Yeah. So whenever a director is also an employee for the organization, so DSP Private Limited Company is the company which is owned by me, and I am the director of the company, and I also work as an employee for the DSP company, which I'm working as a managing director or an executive director, and I also receive salary. Okay. In this condition, the salary what is paid by DSP Private Limited Company to the director, which is me, will not carry any company tax. Company tax in the sense there will not be any corporate tax. The money, whatever the company is paying, is an expenses to the company because the company is paying salary. So it's an expenses to the company. And the money what the director is receiving as salaries. Say for an example, I'm receiving 10 lakh rupees per month. That means 1.2 crore rupees I'm receiving as salary. Then as an individual, I need to pay income tax. Approximately 30%, 30 to 33%. Here they are taking it as a 5 crore income and all. So let's understand for a better understanding, 30 to 31% will be the tax, including educational cess and other things put together. 30% will be the tax. So for the 1 crore 20 lakhs, what I have received as income, I need to pay income tax, correct? So that means I received 1 crore as salary and I paid 30 lakhs as tax as an individual. So under the heading called salary, there is a tax which is individual income tax. Let's come to dividend. Say for example, I have taken 1 crore rupees as salary, but end of the year, the organization, the DSP private limited company has made a 10 crore rupees of profit. 10 crore rupees of net profit. Apart from all the expenses, now the organization is holding a 10 crore profit. And who will take this 10 crore? Obviously, the shareholders or the director of the company will be taking out. And I am the only shareholder. I am the 100% shareholder for this organization. Let's keep for our understanding. That means the entire 10 crore of profit which has been made by the DSP will be coming to me. But will it come directly 10 crore to my account? Because now the 10 crore profit is with the DSP private limited company account, where this company is a limited liability company. Now to bring this money to my individual SB account, I need to go through some process. What is the first process? In India, if you are running an organization, a private limited company or public limited company, first you need to pay corporate tax for all the profits which the organization is making. First thing what you need to pay is a corporate tax. So DSP private limited company is a corporate company, which is a company which is run in India. So for the 10 crore rupees of profit, this DSP private limited has to pay the corporate tax to the government. How much it will be? It will be 25%. So out of 1 crore, out of 1 crore, 2.5 crores will go as corporate tax to the government. When the company is making profit, the company will pay 25% as corporate tax. So the net profit was 10 crores. Now the company has paid 2.5 crore, which is 25% as corporate tax. So the remaining 7.5 crores is with the company after paying the corporate tax. Okay. So after paying the corporate tax, now 7.5 crores is with DSP Private Limited. Now, can this 7.5 crore rupees can be transferred to the director? Yes, you can transfer that 7.5 crores to the director. Right? Because the actual profit was 10 crores. Actual profit was 10 crores. Correct? And in that 2.5 crore is paid as a corporate tax. Post that, whatever money the company DSP Private Limited is having, then that money is transferred to the individual directors as a dividend. Now, after receiving this as an income, that individual director is receiving this as an income, for that 7.5 crores, again, I need to pay income tax. Like how I received a salary, I paid income tax. Same way, now whatever dividend I am receiving, post the corporate tax, for that also I need to pay income tax. So roughly put together, dividend tax, corporate tax, and income tax, both put together, it will be approximately 50 to 55% will be the tax. So that means whenever an organization is making a 10 crore rupees of net profit, out of which 50%, 5 crore goes as tax alone. 5 crores goes as tax alone. One as a corporate tax, second thing as an income tax. The remaining 50% goes to the director. So it is very hard fielding, right? Suppose he wanted to reduce this, or he feels like why this government is taking such a percentage of profits. Let me increase my net profit from 10 crore to 20 crores. Again, what happens if you increase the net profit? Again, for 20 crores, you need to pay 25%, which will be 5 crores. So whichever way you work across, it will be approximately 45 to 50% only will remain in the hands of the director after all the taxes. Okay, first you need to understand it. Okay, now as a DSP private limited company, every year, for our understanding, every year I'm making 10 crore profit for the last 5 years. Okay, every year I'm paying corporate tax 2.5 crores and individual tax as 2 or 2.5 crores. So totally 5 crores is going only as tax. for the last 5 years. Now, how much tax I would have paid for the last 5 years, both corporate tax and individual income tax put together? I would have paid 5 crore every year for next 25 years, which means 25 crore I have already paid as tax to the government for the last 5 years. Now, in the sixth year, DSB Private Limited is getting into a contingency, an emergency situation, where they require some money for them to get away from this loss and make that again to run this organization. Now, only this director has to go and arrange that money. Correct? Only the company has to go and arrange this money. I can't go and talk to the government saying that for the last 5 years I made I have paid tax 5 crore rupees to you as an income tax and corporate tax. So I have already paid 25 crores so far. Can you give me 10 crore rupees as a debt, which I will repay back to you after 6 months or 8 months with interest? Whether the government is ready to give, government will not be ready to give. So government will be, whenever DSP Private Limited company is making profit, they will take corporate tax. And whenever after that the individual income is transferred to the director, then the government will take income tax. Suppose DSP Private Limited goes for a loss. If the DSP Private Limited goes for a loss, government will not share the losses. Government will always share only the profit. They will not share the losses. So this is what the current scenario of all businessmen in India. Okay. Now, the businessman wanted to save some money for his future. And he also wanted to reduce tax. So one thing in this calculation, he can go for loan also, right? From the DSP Private Limited, the director can obtain loan. Loan is also considered as a dividend only. So for loan also, he need to pay corporate tax and also income tax. So he can't take money from an organization which is owned by him directly without paying corporate tax and income tax. Except salary or except remuneration, dividend and loan both will carry high taxing percentage. So now you can think, why can't then he take, instead of taking as dividend, why can't he take everything as salary? The entire 10 crore, let me see, this director is a big director and he'll be taking 83 lakh rupees salary every month. So that means 83 lakh rupees salary for 12 months is equal to 10 crore rupees. So instead of paying him dividend, why can't we take it as salary? There is whenever we are running an organization, there are certain rules and regulations which we need to obtain. In that sense, directors are allowed with a particular percentage of the total turnover only can be shown as salary. We can't show the entire profit under salary. So there are a lot of other restrictions. Let's not get deep into that as of now. For our understanding, salaries are limited. It is not that since I am the owner, I can decide how much the salary I can take. No, there are some company norms and there are some legal laws which is stopping the director to take every money of profit as salary. So there is a limitation. So under that, a salary is being limited. With more than that, he can't take it as salary. So the entire salary, remuneration, dividend and loan, in that the lowest tax carrying part is only salary, and that is also limited now. So remaining dividend and loan, as I already spoken to you, it is 50% approximately goes away from him as a tax. Is there any other tool without a limitation where this particular company can save tax? Yes, there is a beautiful tool which is called employer-employee. So the DSP Private Limited company, right? DSP Private Limited company is restricted to pay salary to the director maximum of 10 lakhs. For an example. So more than 10 lakhs.
Can you just talk about loan once again, please? Loan part.
Yeah, I'll speak once again about that. 1 second. See, why a loan is considered as for getting a loan, for that also we need to pay corporate tax and also income tax, because if I am a owner, I am the director, when I am taking a loan from my own organization, right? If my shareholding percentage is less than 10% in the company, then for that loan, he no need to pay corporate tax, because the shareholding of the ownership of that particular company is less than 10% to me. In this example, I am the director, I'm holding all the 100% of stakeholding. So whatever loan I'm taking, please go on mute, sir. Please don't disturb others. Please go on mute. Since if you see, the person is the owner and also the company director, when he withdraws money as dividend, he need to pay corporate tax. So for all the dividends paid to the director, first the company has to pay corporate tax. Post that corporate tax, whatever money is left with the company, then the company will be giving that as income to the director, which is called as dividend. For that income, the dividend income, whatever the individual receives, the individual has to pay income tax also. Same way only the loan is also treated. If your stakeholding percentage in the company is more than 10%, if it is less than 10%, then that is different. The payment to the company will not come at all. Majority of the times, the stakeholders or the shareholders will be having about 10% only. So because of that, they can't take loan and escape from the taxation. They have to pay the same percentage how they are taking as dividend. Okay. Now, the last option, which we are providing as an employer-employee, as an expert in business, we are going to provide this expertise advice to the businessman. Why this is very important, sir? As a businessman, as a DSP private limited company, a manufacturing unit, a pump manufacturing unit, I am very smart businessman. I know about what is competition, right? Where to source the raw material, how to get the labors cheap, how to bring the foreign missionaries to India, how to manufacture the product with quality with lesser cost. I'm very expertise in my business. But when it comes to savings of money, how to save tax or how to reduce the taxes, how to make more profit, I am not an expertise. So I always look for a chartered accountant or a auditor or a CFO to support me, correct? So this is how any industry you take, any industry. I'm talking about manufacturing industry. You take about any mills, you take about any SMEs, MSMEs, whatever it is, they will be very, very knowledgeable in their business. But when it comes to taxation, when it comes to saving money, when it comes to reduce the tax burden, they always depend on the chartered accountants. So as I'm telling you, you will be equivalent to a chartered accountant giving solutions to the businessman under the heading called employer-employee. What is this employer-employee? See, the DSP private limited company, before paying the dividend, or the corporate tax, even before the corporate tax, if the company decides, DSP private limited company decides to buy a policy on director's name. Say for an example, 10 crore is the profit, correct? In this 10 crore, company has decided now to buy 5 crore rupees of a pension for the director. So DSB Private Limited will pay premium on behalf of Suresh Babu as a director. The company will be the policy owner and Suresh Babu will be the director, life insured. The company will buy a policy. Now what happens? The 5 crore premium is paid to Tata AA by DSB Private Limited company. And the premium what the company has paid is shown as expenses in the books of company under section 37(1). You can note it down somewhere. In the next slides, you will be coming to know. Under section 37(1), the premium paid by the organization on an employee's name can be shown as expenses. So the net profit was 10 crores. Now 5 crore is being paid as insurance on the director's name. So now the remaining 5 crores only comes under corporate tax and also an income tax. So this entire 5 crores is shown as expenses in the books of the employer and there is no corporate tax to be paid. Now the second question will come. Okay, that 5 crore is now given to the director, correct? Whether the director has to pay tax for the 5 crores, here it is mentioned as 38%. You don't read it as 38%. Currently, the year the company is paying the premium, no. For that year, the company also will not pay tax and the director also will not pay tax. So that means 5 crore rupees of profit from the 10 crore is being taken from the organization and kept it with the Tata AA without paying corporate tax and without paying individual income tax. Until then, hope you will be clear, right? So either an individual tax has to be paid if it has been taken as salary, or if it is going to be taken as dividend or loan, then they need to pay both the dividend, corporate tax and also income tax. But when it comes to employer-employee, the company will pay the premium on behalf of the director. And for that, it is shown as company's expenses. So the entire 5 crore rupees of premium which is being deposited in Tata AA as a premium, the company will not pay corporate tax. So straight away 25% profit, indirect profit under tax savings. Second thing, the individual director will not pay income tax for the 5 crores because the policy ownership is still with the company. It is not transferred to me. It is still with the company. So he will not pay for that year. He will not pay income tax also for the 5 crore. So entire 5 crore rupees of money which is being earned by DSB Private Limited is being deposited to Tata AA under employer-employee scheme, not even paying a single rupee as tax to the government. And how long this can continue? Say for an example, if the customer want to save tax like this, you can go for 5 pay, 10 pay, 12 pay, whatever premium paying term. Every year the company will pay 5 crores for next 10 years. Every year the company will pay that premium to Tata AA, and for every year whatever the company pays the premium, they will not pay corporate tax, they will not pay income tax. Until then, hope you will be clear. Let's understand with an example. Right. Now let's see how this particular scheme works. And we are talking about a FG pension. We are talking about a FG pension plan here. And okay, this is not in the PowerPoint, so I cannot put the sliders. Okay. Please travel with me alone. See, the person who is taking this, the director who is taking this policy is a 50 years old customer, and the company wants to pay a premium of 10 years, right? This is a FG pension plan. So the annuity starts from the 16th year. So normally we sell FG pension plan, not like that only. Now, every year, how much this company is paying? Once 10, 100, 1,000, 10,000 lakh, 10 lakh crores. So DSB, so let's take the same example. DSB Private Limited is willing to pay 1 crore rupee as a premium for Suresh Babu as a director, for director to enjoy the tax annuity. So while DSB Private Limited pays this 1 crore rupees of premium to Tata AA, your net profit is reduced from 10 crore to 9 crores. Correct? Because this is shown as expenses. So DSB Private Limited now will pay tax only for the 9 crores, not for this 1 crore. So this 1 crore is invested on behalf of Suresh Babu by DSB Private Limited. Now, what is an advantage to the company? The company will save tax, approximately the dividend, the corporate tax is being saved here. So 25% of corporate tax is saved. So for every 1 crore rupees, every year, whatever he pays, every year the organization is indirectly saving 25 lakh rupees as a tax saving tool. Say how this has been considered as tax saving tool. Suppose DSB Private Limited has not invested this 1 crore with Tata AA. What would have happened? The net profit will be 10 crore. For the 10 crore, they have to pay corporate tax 25%. Remaining, whatever the money left out, they need to pay dividend. For the dividend, the director has to pay income tax, correct? So that means here, since the company has invested 1 crore rupees under employer-employee, now the net profit has come down to 9 crores. Only for this 9 crores, corporate tax is being paid. So the 1 crore is not, corporate tax is not being paid. Because of that only, we are saying indirectly the company has saved 25 lakh rupees. Now, let's understand slightly better. Okay. So every 1 crore what the company has paid has indirectly saved 25 lakh rupees. If they have not invested this 1 crore, then for the entire 1 crore, they would have paid 25 lakh rupees as tax. Correct? So net to net, what we are trying to tell is, if you would have not invested 1 crore with Tata AA, this 2.25 lakhs would have gone to government as tax. Since this tax has been saved, for every 1 crore rupee you have invested, indirect taxes have been saved. So your net actual outflow is only 75 lakhs. Why it is 75 lakhs? Yes, you have given me 1 crore, but net to net, I have actually given only 75 lakhs. Because if I have not given this 1 crore, 25 lakhs would have gone to government as tax. Hope you understand the fundamental concept. So for every 1 crore rupees, the corporate tax has to be paid 25 lakhs. So here, the 1 crore is invested in Tata AA without paying the corporate tax. So indirectly, the corporate tax has been saved. So by the way, the net outflow for a company is only 75 lakhs. But what the product the customer would have bought? for a 75 lakhs, the customer would have bought a 1 crore product only, right? So if you see the net outflow, if I am a director of a company and I am buying this pension plan under my individual name, then the 1 crore what I am paying is post taxes. But here he is enjoying the tax benefit because he is investing the entire premium before tax. So the net outflow will be definitely less. So every year the company pays 1 crore rupees for next 10 years, and every year the company saves indirectly 25 lakh rupees as corporate tax. Because of that, every year the money outflow from the company is net to net calculated as 75 lakhs. Now, from 16th year, the policy is being assigned. The company assigns the ownership of the policy to the director. So DSB Private Limited is holding the ownership for the last 15 years. And every premium what has been paid has been shown as expenses under the books under section 37/1. Now 15 years this company was holding the ownership. Now 16th year, they are transforming the ownership to the director, who is the Suresh Babu. Now the policy got assigned to me. Now I become owner of the product. Okay, now I become the owner of the product. So now what happens? I will start receiving annuity. Now I will start receiving annuity. How much annuity I will receive? I will start receiving 1 crore 2,37,100 rupees as annuity. My dear friends, if you are buying this product as an individual policy or under employer-employee, the premium and the annuity will remain same only. There will not be much. There will not be changes. Not even much. There will not be changes. But because of the pre and post tax investment, the entire scenario and the IRR will change. Okay. Now, for all these 10 crores of money which has been invested in Tata A, not even a single penny is being paid as tax so far, either by the individual director or by the organization. They have not paid even a single rupee as tax. Now, the annuity starts coming. From the 16th year, the director will start receiving his annuity in his SB account, which will be 1 crore 2 lakh rupees. For this 1 crore 2 lakh rupees, he need to pay income tax because pension is considered always as income. So the 1 crore rupees what the director is receiving is considered as income, and for that income he will be paying 30%. Here it is mentioned as 38.32 and all. For our better understanding, let's keep it as 30%. So for 1 crore 2 lakh rupees of money which has been received as annuity from the insurance product, now the director will pay individual income tax of 30%. So roughly around 30 lakhs will be paid as tax. So the remaining 70 lakhs will be post-tax money, which he can use it for his retirement life. So every year he will receive 1 crore 2 lakh 3,700, and every year he will be paying 30 or 32%, depends upon the slab or the slab available during that time. Remaining money he will be enjoying it. Now, why we are saying this? Director has to buy this. Suppose if this director has not bought this product, for every 1 crore earned this year, I need to pay 25 lakhs corporate tax and another 30 lakhs as individual income tax. So totally 45 to 48% goes as tax every year. But now, for every 1 crore saved in Tata AA, the company is not paying 25% corporate tax. The individual is not paying 30% income tax. So totally around 50-55% tax has been saved, not only for 1 year, 2 year, 3 year. For the last 15 years, they have saved taxes of 55%. And now, coming at the 16th year, receiving annuity, and for that annuity, the individual pay only income tax, he will not pay corporate tax. He will not pay corporate tax because this money is not coming from the corporate. This policy has been assigned to him, and now that has become an individual policy. All the benefits what he is going to receive, he need to be considered as income, and he will pay only income tax. So from 55%, they have come down to 32%. And a huge asset has been created. A huge legacy has been created. Right? During this 15 years, during the premium paying term and the deferment period of time, in case, if, say for an example, in the fifth year, company wants some, companies under some contingency, company wants some money to be brought back inside for a temporary purpose, for say for an example 6 months or 8 months or 9 months, because they are seeing a downfall in the market. So they wanted some money to get pumped in and to increase the company's profitability. Now, after 5 years, if you see the company has saved 5 crore rupees every year, 1 crore, 5 crores money has been saved with Tata AA. Now, 6th year, the company DSB Private Limited can go to Tata AA and say, I want some loan. Out of that 5 crore, can you give me 2 crore as loan? They can bring the 2 crore loan to DSB Private Limited, use the 2 crore to get away from the contingencies. Post after 6 months or 9 months or 1 year, you can return back the loan, whatever you have taken from Tata AA, return back with the interest. So without paying taxes, I am saving money somewhere. Without paying corporate tax, without saying individual tax, I am saving money somewhere. If I am a businessman, I'm earning 10 crore rupees. I'm showing only 5 crore as in my books. The remaining 5 crore is called as a black money. Correct? Because I've hidden it from the eyes of government. 10 crore was actual my net profit, but I'm showing in the books as only 5 crore and I'm paying taxes only for this 5 crore. What happened to the remaining 5 crores? I've hidden it from the eyes of government. Because of that, that is becoming a black money. Now, same thing has happened over here. My profit was 10 crore, correct? Now, in that 10 crore, I am showing in my books is also, in the book is only 5 crore. What happened to the remaining 5 crore? Remaining 5 crore, I paid it as premium to Tata AA. And for that, I no need to pay any corporate tax and I no need to pay any income tax as per the legal laws. So every year, the individual can save money without paying taxes, and it will not be considered as black money also. In front of the eyes of the government, we are investing in Tata AA. Under the section called 37(1), this section is allowed and they can save money and they no need to pay corporate tax and they no need to pay any income tax. So whatever the company is paying premium for that money will not capture any taxes. So directly what we are telling, create black money, white money, saving it in Tata AA only without paying tax. And after the annuity period, when the annuity starts, all the annuity money what the director is going to receive, he will be paying only individual income tax. There will not be corporate tax for that. So net to net, if you see, this is the overall advantage to a company owners for their retirement planning. So this only pension plans are allowed under employer-employee. No, term plans are allowed under employer-employee. Savings plans are allowed under employer-employee. Guaranteed plans are allowed under employer-employee. ILP products like ULIP products are allowed under employer-employee. All products are allowed under employer-employee. But here, what we are trying to focus, a person who is 50 years old, he will be away from the company after 60, 65 years. So he is creating a legacy for himself. While he is in the organization, he also saves tax, and at the same time, he creates a legacy for his retirement life. And once he is away from the company, or he might be away, or he might be in the business, whatever it is. But starting from age 65, he will receive 1 crore rupees as a dividend or as an annuity, and for that annuity, he will pay individual income tax. So this is a beautiful proportion which is allowed for businessmen. Right, under business insurance, currently what we have seen is the third option, which is called employer-employee. Right, there are many more topics under business insurance. One is scheme and insurance. Second thing is partnership insurance, and third thing is employer-employee. Currently, what we have seen is an employer-employee. To conduct a business insurance session, normally we need to conduct this session physically, because first-timers or people with half knowledge, when they listen to a digital platform of business insurance, definitely they will get confused because it is very hard for the trainer also to communicate to make the people to understand. At the same time, the people listens in the digital also slightly difficult for them to understand. So we will be trying to do these kind of sessions physically also. What do you mean by Keyman insurance? What do you mean by partnership insurance? What do you mean by employer-employee? One thing what I can tell you is any businessman, any entrepreneur, any business owners you are going to meet, there is always a scope of opportunity for them to bring business under business insurance than a individual insurance. That is what we are trying to tell. Okay, how this employer-employee insurance works? The employer pays the policy. I already told you DSB Private Limited is the policy owner. They are the proposer. And the employee will be the life insurer. On survival, after the policy is getting mature, on survival, the employee receives the maturity benefit. As a director, I will receive the maturity benefit and I will pay only individual income tax. In case of any death to me, the death benefit will be received by the nominee, and the death benefits are non-taxable in the hands of our nominee, because the death benefits are always non-taxable. So an employer pays the premium on behalf of an employee. Here in the case example, what we are seeing, the employee itself a director. Then only they will be investing huge premiums, 1 crore, 2 crore, 5 crore. Suppose an employer wants to invest a policy on his pure employees, like general manager, production manager. They will always have a doubt, why should I invest on this particular person? He might leave this organization, or he might resign this organization and goes and join any other organization. Then what is the purpose of me saving only for tax? But taking the policy on his name, it is also a tax saving, it is also a legacy building. Okay. So effective tax planning under employer-employee, as I already told you, this is a beautiful tool for the employer to save tax. And in this case, the employee also gets motivated. He will be retained in the system. And as I already told you, the director has already create legacy planning, because during my job as a director, as a owner, I have already created a 1 crore rupees of income for my future. I've created a legacy planning for my retirement life, and which is directly reducing your tax liability on your personal wealth, because whenever you are earning net profit, for that net profit, corporate tax 25%, and post that individual income tax 30%, so totally 55% I was paying taxes. Now, when the legacy was created, and when I enjoy the benefits of this insurance product, I'm going to pay only 30 or 35%. The corporate tax has been completely eliminated by taking this particular product. So many people wants to know, is there the rules and regulations are allowing? Yes, the rules and regulations are allowing tax savings for employer. That means the organization for the employer on the premium paid under Section 37(1), and there is no limitation for them to pay the premium. As the first slide, what we were showing, salaries are being restricted maximum to based on the turnover only they can pay salary to the directors. But dividend and loan, they can give any number of amount they wanted, and for entire money they need to pay tax. But under employer-employee, the entire profit, the entire net profit can be paid as premium. That can be paid as premium. So that means what? Suppose if the DSP Private Limited feels I should not pay any tax to the government, let me pay the entire 10 crore on the name of the director under FG pension plan. Yes, that is also possible. There is no restriction. Suppose if that is the scenario, what would have happened? The net profit is now zero. They will not pay corporate tax. They will not pay income tax. The entire money of 10 crore is invested by DSP Private Limited with Tata A on behalf of Suresh Babu. So the company also will not pay tax, and I will not pay tax. So under Section 37(1), the premiums paid by the employer can be shown as expenses in the books. And it gives financial security to the employee, because after 5, 10, 15 years, the employee is going to receive all the maturity benefits, what he is going to take. So he is going to have a financial security. The employee also is retained. Suppose if the company wants to take it on a real employee, he'll also get motivated and he'll be staying in the system. And that will help us to reduce the attrition in the company's organization, right? So here is the plan, which has been given you as an example in a lifeline diagram. So 1 crore is the premium what is being paid for 12 years. So the policy is being taken under employer-employee. The employee's age is 45 years, right? And the company want to pay 1 crore rupees of premium for next 12 years. So every year the company will pay 1 crore, 1 crore, 1 crore, and the entire premium, whatever is being paid for this 12 years, the entire 12 crore rupees is being saved corporate tax under Section 37(1). So every year the company pays 1 crore, every year the company saves 25%. And after 12 years, the policy, after the deferment period, the individual will start receives income, which is approximately 66 lakh rupees per annum he'll be receiving as annuity. And for that 66 lakhs, of the employee who is going to receive, or whether he has been an employee or he has come out from the employment, doesn't matter. But this premium is being paid when he was an employee, correct? So because of that reason, whether he is into the system, whether he has moved away from the system, doesn't matter. Post the money, whatever he is receiving from this product after assignment, that is considered as taxes which is being treated as perquisites under Section 28. It is considered as perquisites. So the annuity, what he is going to receive, which is approximately 66 lakhs 46,000 rupees per annum. For this 66 lakhs every year, the individual will pay income tax alone. Only he will be paying income tax. So that means the company has saved tax approximately 3 crore rupees of premium is being paid, because the company has paid 12 crore and 25% of savings for the 12 crore is 3 crore. So company has paid 12 crore, but net investment is actually only 9 crores because they've indirectly saved 3 crore rupees during this premium paying term. So what are all the companies they can take? Private limited companies, partnership company, limited liability partnership, LLP partnership companies, proprietorship firm, public limited companies, trust, all these things. But there are one thing which you need to know. Under employer-employee, the employee should receive salary. So any company want to give a policy to an employee under employer-employee scheme, then the employee has to receive salary from that employer. So for that, the proof has to be submitted. So the salary, whatever they are receiving, it should be tax deducted at source. So after deducting the TDS only, the salary should get credited. Then only we will be considering him as an employee. This is rule number 1. So any company, partnership, or even proprietorship concern is eligible to take an employer-employee, provided the following rules matters. Following individuals will not be considered. A proprietor of a proprietorship firm will not be allowed under employer-employee. Say, for an example, I am running a departmental store, which is a proprietorship company. And I wanted to take an employer-employee on my name, not allowed. Because I am a proprietor and I am taking policy on my name itself. It is not allowed because I am the proprietorship firm owner. I am also a proprietor. Instead, then you have mentioned it in the top, proprietorships are allowed. Yes, it is allowed. I am running a departmental store. I am the proprietor, right? And I have a general manager who is taking care of this company. And he is an employee who is receiving salary with the TDS deduction. Now, this firm can take a policy on that employee name, not on the owner's name. Same way, partnership companies. Partnership companies, the partners are not allowed to take under employer-employee. Right? The partnership firm can take on the employee's name, not on the partner's name. So for proprietorship company and partnership company, there is a restriction that the owners cannot buy this product under employer-employee. But for private limited companies and public limited companies, there is no restrictions. Even the owners of the private limited company, even the owners of the public limited company, if they are receiving salary from that organization, then that directors can be shown as employee and we can give employer-employee. That's the reason why we have seen the earlier example, FG Pension with a private limited company. And whether trusts are allowed? Yes, trusts are allowed under employer-employee, provided the trustee cannot be the life insured. The trustee cannot be the life insured. Trust can pay premium on behalf of someone, but that someone cannot be the trustee. Say, for an example, there is one hospital, famous hospital in Coimbatore, which is Ramakrishna Hospital Trust. And Ramakrishna Hospital is a trust, and there are a lot of trustees. This Ramakrishna Hospital cannot pay premium on behalf of trustee, but this Ramakrishna Hospital can pay premium on behalf of employees. There is a famous cardiologist in Ramakrishna Hospital whose name is Balaji. Cardiologist Balaji. So Ramakrishna Private Limited is a trust. Now he is taking the policy on behalf of an employee who is a cardiologist Balaji, who is not a trustee also. Yes, that is also allowed. Okay. So let me not get into Keyman and make you get confused. So, and I'm also not going to talk about partnership insurance as of now. Whatever we have spoken or whatever we have seen earlier is only on behalf of employer-employee. As I already told you, all the premiums paid by the company can be shown as expenses under 37(1). So the company saves corporate tax directly. And all the premiums paid by the employer, if you see the third question, for the premium paid by the employer, can employee claim deduction under ATC? No, because the premium is paid by the employer, so he cannot claim ATC. Okay. Now, since the company has paid all the premium paid by the employer will be taxable in the hands of employee. Yes, it is taxable in the hands of employee only when he is going to enjoy the benefit. So that means if I'm taking a plan, pension plan and all, after 15, 16, 18, 20 years only, the maturity is going to come. Until then, the company also will not pay tax. The individual also will not pay tax. They can defer the taxes for 15, 20 years without paying taxes. Only while they enjoy the benefit. That too, if the employee alive, then the employee need to pay tax. If the employee is no more, when the death benefit is transformed to the nominee, then there is no taxes in the hands of nominee when the death benefits are happening. Okay, so a limited version of time within an hour's time we are seeing this particular session, and this session would have
Sir,
given
I
me
have a
some.
doubt.
Ma'am, I'm coming back. I'm just coming back. Just raise your hands. I will ask all your questions now. I'll be definitely asking you. I'll clarify your queries. But what I am trying to tell is, in a 1 hour session, we can't make everything to be understandable. Only thing what I can tell you is there is an immense opportunity for you to go and talk to business owners regarding this business insurance. They can save taxes. So in your contact list, if you see business owners like partnership companies, proprietorship companies, they are doing good business. You are seeing limited liability company owners, private limited company owners. That is your base for us to go and start this conversation. But what I'm trying to tell is don't start the conversation immediately. Just take the list of people who you know as an entrepreneur, as a businessman. Then keep in touch with your business managers, BAMs, BMs, leaders, and trainers. Then tell them that I have undergone a session which was conducted by Suresh Babu sir regarding to the business insurance. I have these many people list who are all businessmen who are doing different business. One is a proprietorship company, one is a partnership company, one is a private limited company. I have a list of people. Can we go and take appointment with these people and start promoting this business insurance concept to them so that they can save taxes? Definitely they will start helping you. First thing why this session is conducted is for you to generate prospect first. After generating the prospect, right, we will be taking these kind of sessions frequently and we will make you an expert in this. And for the field support, there are your leaders, there are your BAMs and BMs and the trainers who will be supporting in the field. But apart from that, there will be a lot of many training sessions which will be conducted, bits and pieces for you to make you understand this business insurance concept. Okay. So, yes, this is a typical subject for us to understand in a 1 hour or digital program, but I would have given you some crux about how this can be worked, right? So, with that, I'm opening for the Q&A. Anyone who is having a doubt or clarification which is required, I request you to raise your hand digitally. Raise your hand digitally so that I can ask one by one so that the conflicts will not be there. There will not get into a lot of people unmuting at the same time.
Yes, sir.
Okay, so as of now, I am seeing 2-3 hands being raised. So first, I wanted to ask about Sri Sai Palluri. You have some doubt. So Ramya, madam, please be on mute. Ramya, ma'am, please be on
Sure.
mute. After
Sure,
Sai,
sure.
after Sri Sai, I will ask you. Yes, Sri Sai, ma'am.
Sir, thank you very much for the excellent explanation. My name is Sri Sai. I became MDRT within 3 months of joining Tata AIA with business insurance.
Great.
I am
Great,
from
sir.
Hyderabad. I am from Hyderabad, the Begumpet branch.
Fantastic.
I have attended a few trainings on BI, and I have a few
Okay.
questions now.
Yes, sir.
Now, recently I visited a customer. My customer says that we are not taking salary or the dividend. Whatever the income I am getting, we are reinvesting in the company. So we don't need the business insurance. How can I convince him? This is question number one. Second question is at the time of assignment.
Sir, first, let me go one by one. I can't take the questions and write it down. I can go one by one.
Okay, sir.
See,
First
there will be some company owners who will be reinvesting it again and again into the same business. For them, how we are going to approach, we need to understand why they are reinvesting into again and again into the company itself without taking the profits. Whenever I'm running an organization, I need to generate profit and I need to take the profit to keep my family happy, keep my family's lifestyle getting upgraded. Correct? These might be generation by generation businessmen, right? They may not require this profit to run their family lifestyle. So instead of paying taxes, why should we pay tax and take that home? Let that get reinvested. If they are into that kind of mindset, we can't break that kind of mindset because of this particular reason. Second thing, do they take, even without taking salary, do they will they be able to take this policy under this?